All right, let's get right into it. While everyone, and I mean everyone, has been completely captivated by the AI boom, something really interesting has been happening kind of quietly in the world of fintech. Today, we're going to pull back the curtain on three companies, Circle, Nu, and Chime, to see what's really going on.
And that, honestly, is the perfect way to say it. The entire market's been chasing AI, right? But while that's been happening, some of the biggest players in fintech have been making these huge, game-changing moves. And we're not talking about hype here. We're talking about real, fundamental shifts in how they do business.
So, we're going to zero in on three companies that are all doing things a little differently. You've got Circle, a heavyweight in the digital dollar space. Then there's Nu, the absolute powerhouse of fintech in Latin America. And finally, Chime, the US neobanking giant. They each have a totally unique game plan. But when you look at them together, well, their recent success tells us a really powerful story about where this whole industry is going. And let's be real, this is a comeback story. After a while where investors kind of cooled off on the whole sector, these companies are proving that fintech is anything but finished. No, it's actually maturing, it's getting smarter, and it's getting a whole lot more disciplined. First up, let's talk about Circle. Now, as soon as people hear the name Circle, their brain immediately goes to crypto. But honestly, that's missing the real story. This isn't about speculation anymore. It's about building the literal plumbing for a whole new digital economy. So to really get Circle, you first got to get stablecoins. Circle is the company behind USDC, which is pegged one-to-one with the US dollar. The best way to think about it is, well, don't think of it like some volatile crypto coin. Think of it like a digital dollar that you can zip around the world instantly. And here's where it gets really interesting, because Circle's business model is so simple but so powerful. For every single digital USDC they create, they hold a real US dollar in reserve, mostly in super safe US treasuries. And then they just earn the interest, the yield on all those treasuries. So think about it. The more USDC that's out there and the higher the interest rates go, the more money Circle makes. Simple as that. So this is the really critical thing to understand. The story is changing. We're moving way beyond just thinking of USDC as a tool for crypto traders. Now it's being used for real-world stuff, sending money across borders, helping companies manage their cash, even giving people in other countries access to US dollars. Circle is basically becoming the operator of a toll booth on a brand new global financial highway. And this analogy, it's just perfect. It perfectly captures what might be happening here. Remember when streaming videos seemed like this little techie niche? And then boom, almost overnight, everyone realized their cable subscription was a dinosaur. Stablecoins could be right on the edge of that same kind of mainstream explosion for finance. Okay, let's shift gears to our second company, Nu Holdings, which has built a totally different kind of fintech beast. Down in Brazil, Nu isn't just a scrappy startup anymore. Oh no, it is a dominant force in Latin America, and get this, it's wildly profitable. I mean, just look at the numbers. We're talking strong, consistent revenue growth. Their profit margins are actually getting wider. And the most important part, continued profitability. That last one, that's the holy grail. It's what really sets Nu apart from so many other digital banks around the world that are still burning through cash. So what's their secret sauce? Well, unlike a ton of other neobanks that just started with a simple debit card, Nu went straight for the jugular of banking, credit. They figured out how to serve millions of people that the old school banks just ignored, and then they built this incredibly popular, full-service digital bank right on top of that foundation. This is such a great way to think about it. Nu built this massive fan base from the ground up, totally on their own terms. And now, they're not just some successful indie band. They're the headliner that everyone's talking about. And that leads us to our third company, Chime. As an absolute giant in the US market, Chime's story is really about evolution. It's about a company that got huge and is now making a really smart, really deliberate pivot towards being profitable. And this right here is the billion-dollar question for Chime. For years, their whole business ran on interchange fees. You know, that little slice they get every time a customer swipes their debit card. But with competition heating up and investors demanding to see black ink, just relying on that one thing, well, it's not going to cut it for the long haul. But check this out. This chart shows they're making some serious progress. It's showing their earnings per share, which is just a fancy way of measuring profitability. The market thought they were going to lose 19 cents a share. Instead, they only lost 12. Now, I know losing money doesn't exactly sound like a win, but in this business, losing less money than everyone expects is a huge sign that you're getting your house in order. So how are they pulling it off? Well, they're getting strategic.
They're branching out into new products, like their credit builder card, and dipping their toes into other types of lending. The goal here is pretty simple. Build a deeper relationship with their millions of users and, more importantly, make more money from each customer.
I absolutely love this analogy. Chime already proved it has a superpower, getting millions and millions of people to sign up. But now it's like we're in the second movie of the trilogy, where they have to learn new powers, like profitability and making money in different ways, to become the hero they're destined to be. Okay, so we've looked at three really different companies, right? We've got an infrastructure builder, a credit-first bank, and a debit-first neobank. So now let's pull it all together and figure out what this actually tells us about the future of money.
This little table really lays it all out. You have Circle becoming the essential plumbing for digital cash. You've got New proving you can scale like crazy and be profitable by focusing on credit. And then there's Chime, showing everyone how to make that tough transition from just growing at all costs to being a disciplined, balanced business. See? Three totally different roads, all leading to a much more mature industry.
And that right there is the big takeaway from all this. If you thought the fintech revolution was over, these companies are basically exhibit A, B, and C that you're wrong. The industry isn't dying, it's just growing up. It's moving past the break things phase and into the build real, sustainable, profitable businesses phase. So I'm going to leave you with this one final thought. Yes, AI is grabbing all the headlines, and it should be. It's incredible. But all of that amazing AI innovation, it's going to need a modern, digital, super efficient financial system to power it. And the real question is, are we looking at the very companies building that system right here, right now?